Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. My view on silver still remains intact to a bearish potential outcome with the negative crossover now coming in from the stochastic, as you can see here. The histogram on the MACD slowly declining does support a further decline into the next 24 hours. Now, the immediate target comes in at $17.30, but this is likely to give way and expose the next target of $16.95. Any advances now towards the region of 1765 to 1785.90 should be seen as a potential sell zone, and I expect to see supply to return and eventually foul. So still keeping a watch on this closely into the next 24 hours. I still hold the view that we will move towards the 1695. Moving on to gold, well, the market overnight plummeted quite severely. As you can see that the price action has nearly achieved this objective of 1,268 since backing away from the highs of 1,296 just 48 hours ago. In light of the current price action, still very much in view to the silver is that we have a negative crossover from the stochastic and the histogram is breaking down. Now the immediate target comes in at 75 and the next target is still holding to the objective of 1,268 to 70. Now a break beneath there would give further exposure to the downside and bring in a new objective of 1,248 before the brakes are likely to be applied and see this decline stop and possibly reverse. Resistance on the day is seen at 1282 as minor and slightly firmer at 1286. Well, the Australian dollar is coming under a bit of pressure after the recent advances and now showing signs of weakness. From the 2 days of bearishness, the market is now looking towards the trigger level that comes in at 75.05 to 74.70. Now a break beneath there would give further exposure to the downside and bring in a target of 73.85. Although the recent Chinese positive numbers that came out yesterday, the market was briefly short-lived from the rally, and as I mentioned, any advances should find a cap now at 55 and firmer above at 75.95.10. Well, as you can see here, the euro is under pressure now since the European Central Bank, or the ECB, left its benchmark interest rates unchanged and dropped any reference to a future rate cut. In a statement after the decision, President Mario Draghi gave a press conference and expressed that the interest rates will remain at present levels for an extended period of time. He also added that it would be ready to extend its quantitative easing program if needed. Although the US dollar overnight hasn't hardly moved and still hugging towards that 97 on an index, the euro has come underneath significant pressure. Now a break beneath 111.70 would give the next exposure towards that target of 110.70.90 and reassess from there. Any advances on a day sees resistance at 112.45 and firmer above, as this multi-month high still holds at 112.80 figure. Dollar yen still pretty much holding to a slightly bullish case, even though the fact that the risks are still towards the downside. Now yesterday on the data front, the Japanese final GDP quarter was disappointing, and the number that missed a forecast of 0.6% and instead came in at 3%. Japan's current account surplus improved to 181 trillion yen, above the forecast of 162 trillion yen. What is concerning, though, is that in Washington, the Senate Intelligence Committee prepares for the hearing of the former FBI Director James Comey. Now, he has come out and said that his organization was lied about and defamed by the Trump administration after he was fired while investigating possible links between Russia and Trump's 2016 election. Now, usually the market looks for a safe haven and if currency, and the yen tends to gain ground in periods of uncertainty. So if the pressures does continue on from the statements given by James Comey, as he testifies at the Senate Intelligence Committee, then we could see further weakness returning, with the immediate support holding at 109.55 and with the objective still holding towards 108.30. Any advances should find a cap between 110.20 to 110.60.65. And to wrap it up with sterling, as you can see here, the market plummeted this morning, and as the UK election slowly comes to an end. Now, viewing the recent news wires, it suggested that the exit polls in Britain are predicting a hung parliament, in the shock result that will turn British politics on its head and have big consequences for the coming Brexit negotiations. The polls predicted Conservatives with 314 seats, but short of its required 326 seats needed for majority. Labour is tipped to get 266 seats, and the Scottish National Party 34 and the Liberal Democrats 14. So since the pound has weakened against the US dollar and plummeted from 129.50 to 127.02, straight in front of that support region of 127.10. Now, we're not out of the whip-less price action at this stage, and I still expect to see big swings coming in now between 127 and 130, or even broader to 125 to 132. So looking ahead, I would still refrain from any strategy at this stage until the picture is clearer and the UK election is put far behind us. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead and a great weekend that's about to commence.